Good morning everyone and welcome to Morning Markets from the team at True Potential. Today we'll just look at some of the economic data that we got out yesterday which supports ongoing recovery in a number of areas of the globe. Firstly, I just wanted to touch on what we saw in asset markets yesterday. Bit of change in sentiment at the sort of the headline level as headlines did appear to focus a little bit more onto the rising COVID-19 infection rates in the US, the hospitalizations as well, various different lockdown measures that are being introduced. If we look at California, further measures there coming into effect. How did it play out in equity markets? Well, not material change at an overall index level, maybe within the indices, some slight subtle changes which we'll come on and discuss. But looking at Europe in general, the major indices probably declined somewhere between 0.2 0.8% in the course of the day. The broad Euro Stoxx 600 was down about 30 basis points. The US, the performance was slightly different, slightly more mixed, where we had the S&P 500 falling about 20 basis points, but in the more economically sensitive sectors there, probably feeling the brunt of that weakness in the US, such as energy and financials. We contrast that with what we were seeing in the Nasdaq. The Nasdaq was actually up about 0.5% in the day, so some reversal and movement back towards some of those technology names over the course of the day. Volatility was probably most evident yesterday in currency markets, primarily with sterling, given the news flow over the course of the day and how that evolved. The initial quite a strong sell-off in sterling as we got news that suggested that the talks were ending without any movement forward. The sterling did then recover a little bit through the course of the day on the news that Prime Minister Johnson would be travelling to Brussels to meet with Ursula von der Leyen to really discuss some of these sticking points and see if there is a way forward over the next couple of days. And that's allowed sterling to appreciate a little bit from its low yesterday. Again, it's something that we'll have to continue to monitor. Clearly, I think the way sterling is behaving at the moment, the market wants to see a deal, but as you can see, there is a lot of sensitivity on the downside when there is some expectation that may not be coming through. The other market, just to touch on briefly, was what happened in the bond market yesterday, particularly the sovereign bond market, where we have discussed how yields have gradually backed up over the past week or so. Yesterday, that trend was reversed, and we saw yields coming in the US, with the US 10-year moving in about 5-6 basis points to 0.92%. Similar move in UK gilts as well. And that again just speaks to that initial comment around that focusing maybe slightly more on those headlines around COVID-19 and the current near-term challenges we're seeing there. Looking at some of the economic data we got yesterday, some encouraging trends there. The first one to touch on just is UK house prices, where we continue to see the strength in UK house prices up about 7.6% year on year, 1.2% month on month. Again, a lot of the support for the UK market will be coming through from some of the measures that the Chancellor put in place to support housing and the recovery of the UK economy. So it'll be important to see how that evolves into next year when some of those support measures do roll off. In another encouraging data point yesterday, we saw German manufacturing increasing 3.2% month on month for October. Again, that really highlights the split that we're seeing between services and manufacturing activity in a number of economies across the globe, but very much so within Europe at the minute, where manufacturing does appear to be continuing to gain momentum, whereas the services sector is really suffering because of the lockdown measures that we're seeing ongoing across large parts of Europe. Overnight in Asia, a couple of data points to touch on there. The first in Japan, where we saw third quarter GDP revised a little bit higher, so growth of 5.3% year on year. And again, a positive trend coming through there if we look at that on a monthly basis within Japan. Also overnight, we had the British Retail Consortium data for the UK, which showed retail sales growth of 0.9% year on year, clearly impacted by the further restrictions. For me, looking at the data, actually the real change and the continuing evolution is just the growth of online in that overall mix. So online actually accounted for about 59% of total transactions, which is quite amazing when we think about that change over the past number of months and how that has evolved. That's it for today. Please do subscribe on our YouTube channel, and I look forward to speaking to you again tomorrow. Many thanks.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.